Going to be talking. Oh, let me fix the camera some. Going to be talking about the market today. Just some general investment talk, because a lot of people are interested in that right now. What's going on with Ethereum and what's going to go on throughout the month of August. I'm going to share with you some deep insight. And if you come down to River Sports on Sutherland Avenue in Knoxville, Tennessee on Tuesdays for Pint Night, come to Midnight Discovery for crypto talk beforehand if you'd like to. We'd love to have you. Free food and beer, talk about crypto, learn some things, maybe make some money, who knows?
Conveniently on the way.
All right, so I'm going to talk a lot about some different market techniques. This is investment, trading type of stuff. Of course, it's not trading advice, but trading techniques you can use to, as much as you can call yourself, if you consider yourself a crypto trader, things that you should know how to do and know what they mean. But first of all, just to cut to the chase, if you're a buy and hold investor, which I don't recommend, especially in crypto technology, a buy and hold technique. I know that's often talked about. I think it's a very reasonable thing to do. If you want to do Bitcoin or Ethereum, you can buy and hold it, and those things are the more stable without requiring much follow-up.
They're proven and they work already.
Yeah, they've proven and they work already. And they have a big management team. But if you want to, if you're investing in crypto beyond the buy and hold method, which I do think it's good to invest beyond that method, I'm about to explore some of these follow-up techniques here. Okay, first I was talking with Sean before about what market cap means in crypto. So oftentimes you'll see these numbers like where Ethereum goes from a like 500 million or 4 billion market cap to like 25 billion market cap. And it looks like maybe $20 billion came into the Ethereum ecosystem. But in reality, that's just reflection of the price change within a short period of time, typically. So when you look at these market caps that they show, you kind of want to think about what is the stable market cap versus what is the velocity-driven market cap. So in terms of Ethereum, for maybe 3 months or 2 months or so, Ethereum has been over, I'm going to just say $80, I don't know. But Ethereum has been over $80 for 3 months now or more, and therefore there's not a lot of velocity that is driving the price above or over 80. But then it reached $400 for like 2 weeks, and before and after that it was more like $350. So was the $400 price the stable price, or was it more velocity driven, which means a short an amount of money coming in within a short time, creating an artificial boost in the market cap number? And so the 400 was probably more likely a velocity driven issue. For example, Ethereum on the exchanges, it shows about $1 billion is traded daily. But I've noticed on one of the other coins I trade on that it said that $500,000 is traded daily. But if I buy more than $5,000 worth in a single day, then I increased the price of the coin. Now, obviously, I was just purchasing $5,000 to $10,000 of the coin, but since it made the price jump so much, it reflected in terms of the market cap as if millions of dollars had been poured into the coin. But that's not true. It's just that since these coins are not investments, they're a scarcity commodity, all I did is purchase the scarcity commodity at a rate that was quicker than the market was able to adjust to. So I would temporarily boost the millions of dollar market cap of the coin, but hours or days later it would adjust back down. And with Ethereum, since it's about $1 billion today, roughly $10 million, in my opinion, has to move, more than 10 million has to move into the coin in a single day from a single actor in kind of an unusual fashion for the Ethereum market price to be artificially adjusted up. That's my opinion.
And that makes sense with all the recent ICOs and kind of the run up we had, and then why they've devalued so quickly as they've cashed out into fiat. Because again, they're basically realizing the same thing you just said, that the true market equilibrium is lower than the velocity price.
Right, and then so okay, in terms of things that drive the price, so I'm just going to talk about Ethereum specifically with another beer, man. You need anything else?
Yeah, cheers to that.
Cheers to that. Let's have a second.
Bang.
Boom.
Getting a head start on that pine night.
Yeah. So Ethereum's the big monkey in the room, and this is really what everybody's talking about right now. For those who are kind of new into the blockchain. Whoops! Oh gosh.
5 second rule. 5 second rule.
I know.
Wash it.
I know. Yeah.
All good. So basically, whatever the last price someone was willing to pay is going to incredibly influence the market cap, even if they only bought 0.001 share.
Yeah, exactly.
And so
Totally.
there's program traders, there's other actors in the market that can basically manipulate the market cap into a higher or lower price than it actually is, by basically trading a fraction, a very, very small fraction of a share, and then the market cap was then calculated. If that's the most recent trade, market cap is then calculated based off of that price.
Yeah.
And so they can, even if it costs them 0.01 of a share, if they sell it higher or lower than they would otherwise, it's manipulating the other market, and it might allow them to make more money off more shares down the road.
Yeah. So in terms of Ethereum, all the ICOs coming into Ethereum did inflate the market cap. That's something I should have been a little bit more aware of, but that's okay.
Yeah.
So that's not an issue so much with ICOs or anybody like attempting to mess with the market. But Ethereum announced that it's going to launch ICOs, and then right at the start of the launch of ICOs, maybe 10 started right within like a month or two of each other. And then after that, the onboarding of new ICOs is more like once a month or whatever the case. It's not 10 every single month. And therefore, there's a big flood of money coming into the market to support these 10 ICOs, which is only 1 a month rather than 10 a month on average.
Yeah.
So that was one velocity thing, one thing that drove velocity to the coin.
Right. In the ICO market space, I mean, again, it's hard to tell what the true market cap is, but it was quoted as reaching over $1 billion. It's increasing for sure. It's not going down. So.
And then in terms of, so that was like one velocity measure was the new ICOs coming in. Another thing was just all the publicity that Ethereum was getting. So this is a little bit more sustainable, because the publicity that Ethereum got, which drove the market significantly, it's not going to go away. Ethereum is going to remain very well publicized and known, same as Bitcoin. So both of these are quite good. And also I wanted to mention that got a donation in Bitcoin dollar, 0.00001 Bitcoin, I think. But thank you very much for that donation. It's awesome. But anyways.
It's a good cause, yes, indeed.
Yeah. So like, what was I thinking about?
The market caps.
Yeah, I know. The publicity. So the publicity created like another velocity metric to the Ethereum price. So you had ICOs coming in, you had the massive publicity coming in, and then another thing in terms of the downside of Ethereum right now is that they're doing a renegotiation that takes place August 1st. And this renegotiation is how much they're going to pay their miners. They currently pay their miners $4 billion a year, and they're going to try to take that down to roughly $200 million a year. roughly.
Right. The stats and the reading I've read up on it very briefly, but I read that it's going to decrease by about 20% initially or 25% initially. Is it more than that?
Way more.
Way more than that? Okay.
It's going from like 4 billion to like 200 million.
On August 1st, just like with the flip of a switch, or are they not doing it gradually at all?
I think it's the flip of the switch. It's the only way to do it. Yeah.
Huh.
So so when Ethereum started, they had a market cap of roughly 500 million for quite a while, 300 million, 500 million, and they're paying their miners 15% for that. 15% of market cap annually to mine their coins. So that amounted to roughly 100 million at the time, and this was their intent of what to pay miners. And then their market cap increased to maybe $1 billion, and then shortly after that it increased to $4 billion, and so that came out to $500 million roughly a year on an annualized basis that they're paying miners, which they decided to go with because that way they could challenge the Bitcoin effectively. And then the market increased from 4 billion to 25 billion in a really short period of time, and they weren't able to renegotiate with the miners, and of course the miners don't voluntarily do this renegotiation.
No.
And so then they started paying the miners what effectively amounted to maybe 4 billion on an annualized rate. So what this rate is negotiated only at the start of the blockchain. So the rate is going to be negotiated that will carry Ethereum for the next year. It's going to be, as far as I know, it'll be settled on August 1st. And so this rate is always based on the market cap of the blockchain, and it needs to amount to something around 100 million to 500 million or more, but that might be the minimum amounts, 1 to 500 million. So based on values right now, that might be something like 3% of the market cap of Ethereum should be paid out to miners. Right now, these miners are liquidating 35,000 shares a day of Ethereum to pay for their mining equipment. And after August 1st, they'll be liquidating 8,000 shares of Ethereum a day. So, assuming that Metropolis goes through and that they change the rates to 4% or so that they talked about, it might be a little bit more. It might be like 10,000, but
it's still a significant decrease. Yeah.
So, in terms of pressure on the market, the miners are currently selling or putting downward pressure of about $2.5 million daily, and after August 1st, it'll go down to something like $50,000 or 500,000 daily. So a real significant decrease in the mining bonus payout downward pressure. So that's something else that will change in terms of the downward velocity. But also, since this price is negotiated at August 1st, it's very beneficial to the miners to create a sharp downward trend of price for which they'll set their negotiation at, and then to allow the price to go back up once they're actually getting paid out. So miners are incentivized to decrease the value of Ethereum as much as possible if you're one of the major miner groups.
Right now, to basically prolong it. And the reason to decrease the price of Ethereum if you're a mining group is to prolong the amount of time you have to mine?
The negotiations are going to be set at August 1st.
Right.
And it's going to pay out a fixed dollar amount of $100 to $500 million. And it's going to be based on market cap at that time.
Okay.
So if the market cap is, let's just pretend the market cap was 600 million, it's not. But 500 million,
yeah.
Then the payout might be 100% in theory.
Right.
If their goal is to get a 500 million and the market cap is 500 million, then you pay out 500%.
Yeah.
But if the market cap is 5 billion or something, then you pay out 10%, et cetera, et cetera.
Oh, okay.
If it's 50 billion, then you pay out 1%. But
right.
But and this rate of pay is fixed for the next year, I think. Okay. And so if they can tank the market for a month until August 1st, then they get a much higher long-term rate of pay than if the market was stabilized by then, properly stabilized. So,
How? But if they're getting paid in a currency, well, I just why are they trying to take a currency they're getting paid in?
down.
Yeah, why are they? Because that's what they're getting paid in.
So let's pretend the value of that fridge. I will give you 10% of the value of that fridge every month.
Okay.
Okay, right? And the value of that fridge is $1,000.
Right.
Okay, so how much do you make a month?
If you're giving me 10%, that's $100 a month right now.
Okay, so let's pretend you wanted to make $100 a month, and this is the price that is fixed, which is mining cost. Mining cost is fixed.
Right.
So if you want to make $100 a month, and I'll give you a percentage of whatever the value of that fridge is.
Mm-hmm.
So let's pretend you value that fridge at $200, right?
Okay.
Let's just pretend you do, because it's an unknown value.
Right.
So you value it at 200. I agree with you. So what percent gives you $100?
Of that, of 200 is 50, obviously.
So 50%. So I pay you 50% value of the fridge every month, and then the fridge increases in value to $1,000. You still get 50%. So now you get $500 a month. And now it increases to $2,000, and now you get $1,000 a month, whereas all I wanted to pay you was $100.
Okay, so I see what you're saying. So basically, when the difficulty bomb hits, they've got a set amount that they're going to pay the miners, and whatever that nominal amount is a percentage of the current Ethereum market cap. It's going to be the future percentage of what they pay miners.
Yeah, that's right. For the next year is the idea.
Okay, and so that's how they're trying to. I'm with you now. Okay.
Yeah, so it's heavily incentivized for the miners to get the market cap as low as possible by August 1st. Not to say that they're all doing this, but the major miners have millions and billions of dollars at stake that if they can temporarily, due to the velocity mechanics of the coin, if the miners can temporarily drive the price down as much as possible immediately prior to negotiations, then they can get hundreds of millions and maybe billions of returns on their investment over the next year. So maybe it costs $100 million to drive the price down, but maybe the return on investment is $2 or $4 or $5 billion. So it's worthwhile to take these risks, or to make these plays.
Yeah.
So like for this year, and this is even though the concept that driving the price down can make someone billions seems ludicrous. But this year, Ethereum intended to pay their miners roughly $300 million over the course of the year, and they ended up paying their miners, let's just say if you averaged it over the year, roughly $2 billion over the past year. So they overpaid their miners $1.5 billion. So that's a very big, misallocation of cost resources. Had they not paid if they not overpaid their miners $1.5 billion, then they could have spent that on research and development. They could have helped the price of Ethereum go up even higher, which is not really, it went up quite high already, but it would stabilize higher at the very least. So after August 1st, so this is what they intend to do. They intend to reduce the sell rate of miners. Right now it naturally occurs about 35,000 Ethereum are sold every day because of the mining outputs. They're going to change that from 35,000 sold to 8,000 roughly sold. I don't know what the final number will come to, but so this will relieve a lot of the downward pressure on the coin in terms of price movement. So
you get the ICOs that are basically finally cashing out of their Ethereum that people bought tokens with, and then you have the miners who are basically trying to drop the price as low as possible until August 1st.
And you got the publicity that came in terms of like what brought the price up, but that will continue rising the price.
Yeah, I think the underlying technology is strong, and I think, the long term, the price will rise.
Oh, and there's one other issue that was a big deal. Okay, so this is talking with the Bitcoin dollar and Ethereum dollar.
Yeah.
So there was something that people were talking about which I frankly thought might happen. It did not. I knew that the value of Ethereum was not stabilized, but it did stay at 350 to 400 for like a few weeks. It felt like maybe it's just
a couple weeks. Yeah.
Maybe it's a couple weeks. So it felt quite like a good number, but all the same. So there's something that was being talked about, which is called the Ethereum dollar. And right now in crypto world, you got the Bitcoin dollar. So in terms of buying and selling, and we talked about exit strategies earlier, in terms of valuing investments, etc.
Yeah.
So if you were to sell Ethereum, the question is, well, if you sell Ethereum, what do you buy in return? Do you buy US dollars? Do you buy Bitcoins? Do you buy, let's say, a car or something? So obviously the car is not a good idea. And we all know that US dollars are not, they're great in terms of a neutral asset, but they don't have the long-term return that like a Bitcoin or Ethereum might have. So when you sell that Ethereum, sometimes you don't want to go into US dollars. Sometimes you want to stay in the crypto market. So what you sell Ethereum for is Bitcoins.
Right.
And then whenever you sell any kind of the altcoin, like I had the Neos, but I'm out of Neos now, as the penny stocks were too nerve-wracking for me. But in either case, so when you go into an altcoin, you buy Bitcoin or sell Bitcoin to get in and out of the investment. So Bitcoin has an insane amount of velocity naturally, just because anyone trading in the crypto world is constantly going in and out of Bitcoin. So then all the currencies are marked to Bitcoin, whereas maybe 7 of them are marked to Ethereum, but there's nothing really stopping all the currencies from being marked to Ethereum instead of Bitcoin.
Yeah.
I believe Polynex has an Ethereum where you can trade back and forth between the Ethereum tokens and Ethereum without going to Bitcoin.
Bittrex does too.
Does Bittrex?
Yeah.
I thought Bittrex ran everything through Bitcoin on their markets.
No. A lot of the ICOs that were dApps built on top of Ethereum, you can swap from the Ethereum. They have the Ethereum pairs with those, those tokens. But like Coin, your Neos coins and Monero, the big ones, it's all Bitcoin.
So. All Bitcoin, yeah.
Yeah.
So, so this is how a lot of them were, but a lot of people have the idea at one point that a lot of the crypto coins will become paired to Ethereum rather than Bitcoin, and that's what a lot of people call the flippening.
Yeah.
So when Ethereum was at 30 billion and Bitcoin was at 40 billion, which might be the height of the price disparity between the two.
32 to 40, I think.
Yeah, it's like 32 to 40. That's when a lot of people thought the flippening was close to happening. Basically, if Ethereum got up to like, if Ethereum gets over Bitcoin in market cap, then it's quite unlikely that the markets will continue to use Bitcoin as their dominant dollar, whereas the Ethereum system, or the Litecoin system for that matter, are kind of superior. They're just less known and less established than Ethereum.
Yeah.
So that's in terms of some of it. So a lot of people kind of invested in the Ethereum thinking that the flippening might be around the corner. And I frankly thought it was. And I thought the Bitcoin might just fall any day now.
But I definitely thought it was. Yeah, I bought into the flippening big time. I feel like long term the flippening is still imminent because.
Well, people say by the end of the year that it's going to happen, and I don't think that's wrong to say that it could happen by the end of the year.
I think if they come out with some sort of scalability solution, that's going to be game changing. Like that will the flippening.
The Lightning Network or the
Raiden, something to just process more transactions faster. Yeah.
Raiden and the Lightning Network are what they're thinking.
Yeah, and that's what
for Bitcoin.
And that's what Litecoin already uses, right?
No, nobody knows it. Litecoin caused it's their future technology name, which they hope to discover first, and they named their coin after it. So one thing about Litecoin, so Litecoin, the idea with Litecoin, one of the ideas with Litecoin is that they will discover the Lightning Network before Bitcoin. They will discover it before Bitcoin. This is, of course, because Bitcoin should be the slowest in terms of technology growth.
Yeah.
But Ethereum is doing the Raiden, which is similar to the Lightning Network, and I believe Raiden is further along than Litecoin. Now, one thing about Litecoin in terms of an investment value, in terms of a hedge, I'll talk about this later in terms of investments, Litecoin, the CEO, I believe, was also the CEO of Coinbase. So in terms of marketing the coins, like marketing is such a big deal for these coins. So the person who, a person who most likely got a humongous payout for Litecoin was the person who was responsible for putting it along with Bitcoin and Ethereum on the Coinbase website.
Right.
So just by putting Litecoin next to Bitcoin and Ethereum, that guy made millions and billions.
Yeah.
From the marketing aspect alone. But all the same,
and I don't think it's only been on Coinbase. It hadn't been over there more than a year.
2-3 months. Yeah. I think.
I remember it was on BTCE like back in 13 for sure.
Yeah.
In 2013.
Oh, really?
Yeah.
Okay,
yeah.
so Bitcoin investor.
Because I remember trading. Yeah, I originally bought into Litecoin when it was $3 and $4. I sold. Yeah, I used to have 500, but I sold them at like $5. So.
oh, that's.
If only.
Right. Yeah. Buy and hold, man.
Yeah. Yep.
But
especially for good underlying technologies, and I think that's the key, right?
I
agree. Long-term picture.
Well, so in terms of underlying technologies, I would much phrase the statement, especially in terms of this day and age, think about management.
Yeah.
Think about the management team and the management structure. So, one, you're reaching a level where the single or 2 or 3 or 5 guys are not enough to compete in the crypto space, or it's becoming a world where soon they will not be enough to compete.
Right.
In 2 years ago, these guys made hundreds of millions, but today, even though they still making they still are making hundreds of millions. They're probably going to go out of business because they're just not doing it right.
Mm-hmm.
So today, in the crypto world, to be real successful, you need, let's just say, a crew of 50 minimum crypto programmers. And you need a management structure that can handle that. So Ethereum is established as one of the ones that has a relatively large crew and a transparent management structure that I enjoy. The Bitcoin has a very argumentative management structure, not very efficient, even though it's kept up to some degree. And then Litecoin, I think, is mostly a corporate management structure, so I will just say naturally, I personally kind of like that. In terms of business, Tezos is an example. Even though I disagree with the general, I don't know what you call it, but the selflessness that I like to see in like a Vitalik and others.
Decentralized, yeah.
Well, I like the idea that the management is not trying to get $30 million from the ICO, which is what they got paid from their ICO. Management got a bonus of $30 million.
Is that what the final proceeds were?
It's right around there.
Yeah, I know they got 8.5%, which seems
plus 10% to a company that only those two owned, or something like that.
Yeah.
So it's around $30 million. So it would just be greedy, is the correct term. It is just a greedy move to do, but they're also business people. And I do like the idea of a $300 million company or a $10 million company or, frankly, even a $5 million company being run by somebody with some business sense. If there is a true $5 million of investments that were invested into the company to create product, having somebody with a business sense in there is going to add a lot of value to the company. So these two have that. So while I dislike their greed, their management and communication and marketing abilities and their networking abilities have proven effective in their ICO. I mean, they raised $300 million from a company that might not have been worth that much, who knows, but $300 million is a very good raise.
I think it was the largest crowdfunding project to date.
Yeah, it very well might be.
Yeah.
And it might be 200 million, but it's 2 to 300. And so
yeah, it was extreme. A lot for like a 40-page white paper or whatever they put out there.
Right. So when you sell your coin, like if you sell your Ethereum or Litecoin or Bitcoin, the question is, what do you buy next? And you can think about that as, what is your hedge? Is a good way to think about that. So like if your goal is to sell Ethereum if it drops, you probably don't want to buy Steam, or you probably don't want to buy
something more leveraged and more.
Well, something based on Ethereum.
Yeah, exactly.
Yeah, if your goal is to reduce your risk of Ethereum or to like sell Ethereum, you don't want to buy another thing that's based on Ethereum, especially if you're trying to avoid a downward trend. So you might buy Bitcoin, which is like the Bitcoin dollar, the Bitcoin hedge, you could call it. You can think about it as your hedge investment.
It's basically your only way to stay in cryptos and try to hedge.
Yeah, you want to try to stay in, you want to try to hedge.
Yeah.
So you like right now, I think a good hedge is Litecoin. Personally, I'm not in Litecoin, but I think buying Litecoin or hedging Ethereum, sell some of your Ethereum, buy Litecoin is not a bad idea at all. I think similar with Dash is good. And of course, there's an advantage if you hedge with Bitcoin, then you can place a bet on all the other currencies with your hedge. So I'm going to start talking about some other investment strategies now too. So before you can sell, you want to think, what am I going to buy next? You don't want to think in an isolated sense, should I sell or should I not sell? Well, if you sell, you're buying US dollars, or you're buying Bitcoins, or you're buying Litecoins.
Right, most likely, yeah, those are your only choices, if Litecoins is even available for the market.
Right, so like at one point you could have sold Ethereum and bought 1.5 Bitcoins, which let's just say now we know would have been a great deal. And then if you bought back Ethereum now, you get Ethereum at like 0.08 Bitcoins, or almost half the value. So you could have doubled your Ethereum bucks if you hedged into Bitcoin and then came back out into Ethereum bucks. You could do a very similar thing with by going into dollar bills, but if the crypto market as a whole took off, well, your Bitcoins were somewhat protected, but had you come out into dollar bills, then you would have been at a big loss if the crypto market as a whole took off.
You wouldn't have any exposure to those gains.
Right, and then there's all that like withdrawals and everything else that becomes problematic. So what you can do is try to find out what's the thing that I'm going to use as my hedge. What's the thing that's kind of opposite or has a risk not associated with my primary investment. So if your primary crypto asset is Ethereum, which it is for me, and I think it's a good one, your hedge might be Bitcoin, Litecoin, or Dash would be if you wanted to talk the major players, those would be the major ones I hedge against.
Yeah, I totally think those are the big three. Some other ones you might want to consider are like Monero or Zcash, but yeah, usually those six that you mentioned now are pretty much your only ones to go into. You got your Dash, your Zcash, your Monero, and then your big three, the Litecoin, Bitcoin, and Ethereum.
Yeah.
Those are the big six stable ones, and I think those coins are going to be liquid markets. They're not going anywhere. I think you could go to any of those and be fine. I think that, you just got to know your beta. I think Bitcoin's got the least beta. I mean, it's got more...
Of the crypto world.
Yeah, of the crypto world compared to US dollars. I think Bitcoin's got the least beta, and it's the most stable. It's the most historically proven. Litecoin's probably got the most growth rate right now. I think of Litecoin as like a 4x Bitcoin, but it's faster, it's more efficient as far as transactions go.
And I don't think they're doing a big reset on August 1st like Bitcoin is.
Yeah,
I'm not positive, but they are.
I don't think SegWit's on the horizon like they are.
Bitcoin and Ethereum are both doing a big transition August 1st, which is causing a lot of people to get out of those two into Litecoin as their hedge.
Right.
Not saying that that's necessarily a great idea, but it's probably going to be profitable for quite a few people. But alternatively, you could use Dash, maybe.
Yeah, I feel like Dash is going to be really
It's very
secure.
different. Oh, you think I think so too in the long term.
It's lost a lot of its value, just like Ethereum has. It has. Bitcoin's probably lost the least, obviously, of the crypto world, then Litecoin. But then I would say either Dash, Zcash, or Monero have lost the next least. The Ethereum's lost a bunch. Ethereum Classic's lost less than Ethereum.
Yeah, well, it also went up less.
They're right.
But that's true.
Percentage-wise.
So then when it comes to selling or getting out of a coin or whatever, ideally you want to do a limit buy or a limit sell. And ideally you want to have like a day to get in and out if you want to kind of take your time about it. Don't try to let your nerves get a hold of you too much.
You almost never want to do a market order, right?
Yeah, you prefer not to do a market order. If you can, you can do it. So, in terms of what is limit buying, what is limit selling, what is market order? So, in the marketplace, there will always be a buy and a sell. So, Ethereum, it might be someone willing to sell it for 280 and someone wanting to buy it for 270. So, if you do a market buy, then instead of doing 270, 271, 272, 73, 274, then you immediately agree with the 280 price. Now what you could do instead is a limit buy, and if you wanted to be the first limit buy up there, the previous one was 270, you just do 271, 2, 3, 4, 5. And then one of the other sellers will do a market sell, and they'll reach your 275 price.
Right.
And then you two meet and you do a sell. Or someone just does a snipe, which happens quite a lot in terms of big orders and big purchases. So if you're trying to buy, let's just say 50 million Ethereum, you wouldn't want to do a limit buy of 50 million Ethereum. What you'd prefer to do is watch people who place big sell orders and then buy all their sell order at once. So if you do something like that, then they don't have time to adjust. But if you put up like a $50 million limit buy of Ethereum, then the people who were trying to sell it, they might be thinking that they were getting impatient and having to meet your price. Now they just became a lot more patient because they see that you're trying to buy 50 million. And of course, that's way bigger than what the market can handle. So they know that it will take days or weeks if they hold out for just a little bit of a price jump.
Yeah, it's going to take a lot more volume for you to meet your full order than it would be for them to meet theirs. Mm-hmm. The bigger your order, the less liquidity you have, obviously, because the bigger percentage of the market it is.
Yeah. So limit buys and sells are good in terms of getting in or out of major values of investments. Now with Coinbase, it's all market order, and with Shapeshift, it is also market order.
Right.
With Polynex, you can do limit buys and limit sell of Ethereum, which is great. And then also you can also do this within the same day. This is where day trading actually becomes slightly profitable, especially in highly volatile currency. Maybe like Ethereum, you could have sold it at 220 at one point in the day and then bought it at 270 or 260 at one point. Even
170, yeah, 160.
Yeah, even though the regular price was still at 190 or something like that. So there's other times you want to stay into a currency, and then you want to maximize your leverage of that currency. Like for example, Ethereum, I'm trying to stay within. So what I've done with Ethereum, and this is good if you have any money that you have on an exchange, you want it to be working for you. This is what will reduce the risk that it'll reduce significantly your emotional stress from investing. So I have 30 Ethereum on one exchange in Polynex, I believe, but all the same. My ultimate goal is to stay within Ethereum, but I also want to profit from the downside of Ethereum. So Ethereum is going down quite a bit, and I want to make excessive profits on the what I suspect is to be a rebound in Ethereum in a relative short time frame. Maybe 6 months, but relatively short.
Right.
So what I've done is I've done a pairing investment that's paired to Ethereum, so Steem it, like I mentioned before in terms of this is not a good hedge bet, but if you want to leverage your investments, it's fine. So I've paired my Steem it and Ethereum together, and I put in a purchase order of Steem it whenever it drops to half the current exchange value of Ethereum. So if Ethereum drops in half of price and Steem it drops in half in price, then my exchange value is the same. But if Steem it drops twice as fast as Ethereum, then that's when my order starts to execute. So Ethereum has gone down maybe 50% from where it was at its peak. Steem it has gone down maybe 70% where it was at its peak.
Right.
And my purchase is about to kick in.
Yeah.
So then
that's awesome timing. Yeah. Because it's basically at its lows.
Yeah.
Buy low, sell high.
So in terms of the betas you mentioned,
Yeah.
even though but yeah. So in terms of betas you mentioned, things that are based on Ethereum are naturally going to have a higher beta than Ethereum.
Right.
And then those also have smaller markets, so they're more susceptible to high amounts of volatility or velocity. Is the way I like to think about it. So the velocity right now for a lot of Steemit coin, for the millionaire Steemit users,
Yeah.
they're trying to cash out before they lose all their millions, and I'm trying to buy in only if I got a limit buy, so I don't have to check in on this as long as I'm comfortable with it, which I am, but I don't have to check in on this. It's just a limit buy if for a second it hits half of the value of whatever I saw it at whenever I put the order in, which was about a week ago. I'm basically trying to do half value within a week. If the market cap drops a half in a week, I want to buy it. If it's a natural decline or a natural incline or whatever, I don't want to do this action.
Do you use notifications on any sites to tell you like when some coins? That was I wondered if they're available.
Well, the limit buy, limit sell, if you get in the habit of that, which I'm trying to do, then you don't need to worry about the notification. It's just there.
Right. If it hits, it hits.
If it hits, it hits. Yeah. And you're trying to make these things in such a way that you should be 100% profitable if it hits.
No, that makes sense. I'm with you, and that's much more measured, and you have a plan. Yeah, it's much better structured.
And because a lot of the times when these market caps are particularly high or particularly low, it's only for like 30 minutes.
Right.
It's only because one person who was unfamiliar with how it worked, he did a market buy of 100 million of Ethereum, and then it goes up $30 for just a minute, and then it drops back down as soon as people can react to his market buy.
Right.
So market buys are essentially what make dramatic swings in the market, and the more people are doing market buys and market sells, the more that you can take advantage of limit buy and limit sell. So that's why, in terms of crypto world, it's so much more advantageous. I would speculate there's possibility of just making a decent living based on learning how to master the market buy and market sell, just because the velocity of people coming in and out is so dramatic. So in terms of down price in terms of Ethereum, another down price in terms of a downward pressure in terms of Ethereum is there are a lot of people, maybe 900 plus people who invested into Ethereum early, and they had investment assets of maybe $100,000, and then after Ethereum went up to 10 times its worth, they had $1 million, and these people unquestionably cashed out $200,000 to buy either a Tesla or a nice car, or to buy a house for their family or whatever the case may be, or just to take a vacation, as some of the ICO people did, but all the same. So that's another, if there's Ethereum in particular, when Ethereum goes up to a super high value, eventually the new millionaires are going to want to have the lifestyle of a millionaire, whereas let's say Bitcoin perhaps or whatever, but a lot of the old millionaires of Bitcoin, they'd already taken their money and spent it or whatever. It's a possibility.
No, I'm with you. I think there's a lot of people that actually started liquidating, and people were investing big time for the first 5-6 months of this year, and then the last month they've been selling, and cashing out on the first 6 months of investments.
Yeah, but so every coin that I have on an exchange right now, I have a limit buy and a limit sell going with them. The coin that I bought for a 50% decrease or whatever, one of them hit.
Yeah.
I'm selling it now. See. But basically, if it returns to only a 30% decrease one day, it's not a major part of my portfolio. So I'm kind of just.
It sounds like it's going to be a pretty rare opportunity that something will go down, but it happens. I bet.
It's been there. Well, as much as we worry about Ethereum, let me just tell you, the Steemit people are going down twice as hard.
Oh yeah, and that's another one I followed, because there's 3 currencies with Steem, isn't it? And there are 3 values. There's Steem back dollars.
Steem and Steem D.
Yeah,
I think so.
So I don't understand all that, but I know that it's basically incentivizing people to pay for content, right?
For content and posting, and you can
Yeah.
get like $60, $1,000.
Yeah, it's definitely got value. I think I'm going to the bathroom real quick.
Okay. So then, some other ideas about what to do and think about in terms of investing and other strategies for investing. There's dollar cost averaging that I hear talked about now a lot with a crypto coach, which is if your plan is to transition your assets from, let's say, a situation where you got 0% into cryptocurrency to where you got 5 or 10% of cryptocurrency, regardless of the price of a current one, then what a good approach to do might be where you invest 20% every month, or maybe you make 40% initial investment and then another 20% investment every month after that, or every week. Now, in terms of if you expect the long-term growth of crypto to be very significant, then maybe you want to invest all at once immediately. But if you happen to catch it at a high, this can leave you a little bit worrisome. And then another thing that you see with people is they buy it at 400. It might go down to 200 now and lower. And then they're thinking about what price should I sell at rather than what price should I buy some more at. And of course, thinking about both is fine, but when you buy something at 400 and then it goes down to 200, and your thought process is like, when can I sell this to get, like, let's say US dollars or something? That's kind of like the opposite of what you should really be thinking. You should be thinking in terms of, I think it's better to think in terms of your overall investment assets, and you want to include your 401k, your house, and your job and everything. Your overall investment assets, and then to pick a percent of that and try to move a percent of that into something that you're interested in, such as crypto as an asset class. And then if that's 5% and then it drops to 2%, well, then you have plenty of US dollars or whatever it may be to bring that back up to 5%, and you end up buying at good values that way. But there's a lot of times where people are reactionary to the market, which a lot of people are.
Yeah.
And so a lot of people I know, I could not get them to buy crypto when it was at a good value. A lot of people I know, they buy crypto only when it's kind of at like a higher price or something like that, because they watch it go up, which of course is not the time that you really want to get introduced to a market. Mm-hmm. But that's how a lot of people are. So you get introduced to a market like while it's going up, and then while it's going down, you might be thinking about, you have a little bit of buyer's remorse in the short term, presuming that it goes back up eventually, which I think it will. I think for Ethereum it'll be, I think around December is when it'll start approaching. My hope is that this is, of course, a blip primarily, and that I think around December it might hit 300, and then this time next year, I would be surprised if it's under 400, or 300 anyway.
I think it's going to be over 500 this time next year.
I had the peg in terms of investment. I have the peg of $500 in 2 years, which is just 100% rate of return, which is a lot more than any other asset that I know of. So in terms of evaluating your assets, you want to think in terms of what do you know is better, not what's the highest possible it could go. So if you say that with high certainty, and I'll just say with high certainty, that Ethereum will go from like $250 to $500 in 2 years, which is what I personally think, with high certainty. Is there anything else that you can make a similar statement with? If there is not, then your investment analysis needs to go no further. Ethereum or something similar to it is its best choice. But if you have a true alternative, like let's say Bitcoin or whatever, Bitcoin's at 2,500. With high certainty, will Bitcoin be worth $5,000 in 2 years? I couldn't say that just because I think at one point it might get replaced or whatever. So that's my personal opinion, but maybe so. Very, very well maybe. But there's nothing else that I can answer like for long term. And I'm just saying 2 years for crypto world long term. So for long term hold of wealth, I know. There's nothing that I can think of that's better than Ethereum. But for short term price fluctuations, a million things depending on the velocity of the people moving in and out of the situation. So, but anyways, but some people think Ethereum will be $1,200 by December or by this time next year, which if there's the flippening, like if it becomes the Ethereum dollar rather than the Bitcoin dollar, then Ethereum will essentially double in price within a week or a month.
Yeah.
Because it's such a dramatic change. So when Ethereum was going up to $400 and staying at $400 for quite a while, a lot of people thought the flippening would occur at that point. But I have a suspicion that the flippening will occur essentially the next time Ethereum approaches $400 or $500. That's probably when it'll catapult over.
Yeah, I think the next run up, right? I think that's when it's gonna happen.
The next run up, whenever the big run up is.
Market cap, yeah, and that's another thing. Like I've noticed that the run ups traditionally, if you look at the historical trends, the run ups are a lot faster than the sell offs. So like the run ups are pretty steep.
Is that right?
In a short time, yeah. Especially if you look at the historical charts on Bitcoin and Litecoin.
Mm-hmm. Yeah.
The run ups are really quick, and then the sell offs.
So basically, as soon as it stops running up, like if it stays stable for 5 days after the run up, it's probably time to sell.
Top, we've reached our top here, basically.
Reached the top, maybe.
Yeah.
Yeah, Ethereum stayed high for quite a long time.
Yeah, I think it was over 400 for a few days, maybe, but not more than a couple of days.
It was 420 at some point.
Yeah.
I mean, it got up there.
I remember, right? Yeah, that was that Monday especially. I remember that for sure. Whatever Monday that was, I think it was like June 10th, maybe June 11th. Something like that.
I was dancing all the time.
Those were good times indeed. Yeah, and I think the return. I just think that it's kind of a lull in the action right now for sure.
Yeah. So I used to do Ethereum dances. I haven't done those in a while.
I know. We'll have to get us an Ethereum rain dance going. Hopefully with some run ups.
The money rain.
Get the rain dance.
But yeah, so in terms of other like investment things, so as much as you can, if you want to get onto I'm just going to suggest Polynex, but there's Bittrex, Polynex, and Coinbase. GDAX are kind of the main ones. Kraken, yeah, I like Kraken too. But on Polynex is pretty good for doing a bunch of limit buys and limit sells, especially even if you're trading large amounts of Ethereum, like 100 Ethereum or like buying 10, 15,000 of Ethereum. It's kind of nice to put a limit buy or limit sell. It both helps to stabilize the fluctuation in the market, and it makes you a lot of money in the process. So it's a good thing to do. And then if you have money on those exchanges, it's good to have something in mind in terms of what you're willing to sell into, and then to always place a limit buy or limit sell for extreme value swings on that. For example, Bitcoin and Ethereum are like stable, so you might always have
tighter collar.
Well, you might, or you just put an extreme one in there. Like I got an extreme one. I'll probably make it tighter, but for 0.05 Bitcoin to Ethereum.
Oh yeah. It's at 0.08 right now, but then again, it was at 0.14 on
just days ago,
a month ago.
Yeah. So I got one for 0.05. I'll just let it sit. So if you're gonna let it sit, let it sit for a week or more. Mm-hmm. I try to do 30 to 40% outside of the 40% change in price.
Yeah.
So I got a limit sell of 30-40% change in price, and I got limit buys of 30 to 40% changes in price. And then on the things that have a higher beta than Ethereum, it's kind of like 40 to 50, like Steemit
Yeah,
and
makes sense.
Golem, or whatever the case, and
makes sense.
Golem, or whatever the case,
Yeah.
Augur,
Gollum,
and
Bat.
those. Yeah, it might be 40 to 50%. Because the idea is that I'm not trying to buy these coins. If you're trying to buy it to get into it, then you need to put it right around market price.
Right. You're trying to get an ASAP.
Yeah, right around market price. But if you're trying to buy it just if someone makes a huge sell really quickly at market value, or someone makes a huge purchase really quickly at market value, which is what I'm trying to do, then, like, for example, there's some people who bought Ethereum at 10 pennies or 10 cents, and people had limit buy orders for more than $1 for Ethereum, just unlimited Ethereums, you would have made millions and billions of, millions of dollars right now.
Yeah.
So you always want to have these limit buys and limit sells in there, even if they're ridiculous prices. Like, let's just pretend if I was to do a limit buy of Ethereum for 0.01 Bitcoin, like 100 Ethereum for every Bitcoin I spend. The chance of hitting it is so slim, but there was one day on Coinbase and GDAX that people hit it because someone sold a million Ethereum or whatever, all at market. So this person who sold a million Ethereum at market, he would have sold it to me for $1 or whatever had I offered $1, but instead I simply offered nothing. So then I missed everything, and the market corrected itself before I could step in to fix it.
That's an excellent point. Yeah, because there was a very smart trader that had, and it was the price of like Ethereum. It was like maybe 380 or something at the time, and he had it set for 10 cents in Ethereum, and he was trying to buy 3,800 Ethereum, and they let him basically keep the order. And if I remember correctly, like, the person initiated the original start, the catalyst of the whole situation was a guy came onto the GDAX, initiated a market order, sell order of 15 million.
Yeah.
And it pushed the price from like 350 or 330 all the way down to like 225. And that triggered all these prop trader and automated program trading programs to sell, and then stop losses on margin all got triggered. And then basically it plummeted all the way down, and GDAX apparently didn't have enough liquidity at the time.
Right.
Because it basically gouged all the way down through to 10 cents a share, and that guy, he got his 3,800 Ethereum for 10 cents a share, so basically he got 3,800 Ethereum for $380.
And then some people think that, like, does this guy then sit on his Ethereum? No.
Of course not. Anybody that has the ability or, like, wherewithal, or probably the bot set up to do that.
Yeah, if you get it for 10 cents and it turns to 380 in a minute, you sell it all, and then you set another 10-cent buy of Ethereum.
Rinse and repeat.
You just rinse and repeat, and even if it happens once every 5 years, you've made a whole lot of money.
Yeah, made 12 million in less than a second.
12 million in a second. I mean, granted, it's, So you always want to have these orders in place, even if it's for ridiculous values, ridiculously low, which in a week I like to think about 50% change as ridiculously low, but even if it's for a 90% drop in value or a 90% increase, likewise, in value in a week, I think that's a good way to kind of gauge your velocity metrics.
Yeah, and so what is the drop that we've experienced now? 420 to 180. What is
about 50% or more?
Yeah, it's more than 50%.
55%.
210 would be 50. So another like 42 or so. It's probably about 60% almost.
Yeah.
So if it hit 170, that would be a little bit over 60%. But anyway, big drop has obviously occurred to Ethereum over the last month, and I think that that basically, how do you set your collar? I didn't think it was going to drop 60%, for instance. And so basically my collar started hitting 30, 40, 50, and I started scaling all the way in on 260 and so on. And then obviously it's at like 180, 200 now. So
yeah. So what did I do? I set one of my collars for 0.1 Bitcoin to Ethereum, and I set most of my Bitcoin. I didn't have a lot, but I set it to come in right then. So I'm probably, frankly, going to change one of mine. But one of mine is the 0.05 Ethereum to Bitcoin, which is just an extreme one. Yeah. But it's because I am mostly in Ethereum. Right. So I don't have that many Bitcoins. So that's one reason that I have a kind of extreme collar. But I'm probably going to do a situation where I set one of my Bitcoins to buy like 100 Ethereum at 0.01.
Yeah.
I just try to make that $1 million in a second, like the
Right.
one guy. Or like 0.03 or something crazy.
Yeah.
And then I'll probably set one of my Bitcoins a little closer, but I'll probably try to walk it in. But the goal with the collar investments, like you're looking for extreme changes within a short period of time is the idea. And this is a good way to do sells too. And a good way a way that I think is reasonable is 30% change in a week. If it goes up 30%, if it goes down 30%, sell some percentage of, rather than 100% purchase or 100% sell of your stuff. I kind of think in terms of like, this is not a great way perhaps, but I kind of think of 10% of my investment into that situation. So
yeah, that makes sense. Especially if it's a percentage of your investment. I think that's better than like some arbitrary nominal amount.
Right, so like I got some Bitcoins and I got 6 Bitcoins. Do I want to invest all 6 Bitcoins at 0.05 and then I have no Bitcoins at all? Well, maybe I want to do one at 0.01, one at 0.08, one at 0.06, one at 0.05.
Right.
And I just kind of spread it out a little bit. So then even if the price kind of moves and it was the wrong value, I did invest 100% of the Bitcoins at 0.05 and invested just 10% of the Bitcoins at a certain price. And then if I can't get it at that price, but I really want Ethereum later, I can still purchase it.
Yeah, and it gives you options, and I bet it, puts less pressure and anxiety on your investor psychology.
So much less. Like,
you're like, oh, well, it went down. I'm just buying more. Whoop-dee.
Yeah, I got limit buys on things that where they have to drop in value 50% faster than Ethereum drops. So I got limit buys on those, and I feel pretty good that if I can get anything that is dropping faster, 50% faster than Ethereum, that should be a good.
Considering that it's lost 60% of its value in the last month.
That should be a good buy. And if I stay in Ethereum, I have no problem staying in Ethereum. Of course, that's my opinion. And then in terms of my Bitcoins, if Ethereum drops 50% in value from where it is today or whatever, even though my Ethereum investment is done poorly, since I have a somewhat diversified asset pool, I can use my Bitcoins to buy Ethereum, which is my hedge right now. Like Litecoin would probably be better, maybe Dash long term, but I chose to do, well, I actually did not choose to do Bitcoin. The little trading mechanism, this is in terms of Bitcoin dollar and Ethereum dollar, the trading mechanism sold me into Bitcoins, and I just said, you know what, Bitcoins are good.
Yeah.
So that's
not a bad idea.
That's in terms of Bitcoin dollar and Ethereum dollar.
When you got lucky, it sold you into crypto.
It gets you, like, you're incentivized to just, the lazy you just stays wherever it puts you. So it puts me in Bitcoin, and I'm lazy enough to just stay there rather than to move to Litecoin.
How does that work? Do you not have to choose which pair you're trading in?
Well, no. If I got Neos, I had Neos. It only sells in Bitcoins.
Right. That's the market pair that it has.
Yeah,
that's Neos to Bitcoin.
Pair, yeah.
But when you sold Ethereum, you knew that you were selling Ethereum to Bitcoin, right? Not Ethereum.
Well, I didn't sell Ethereum to Bitcoin or whatever, or not much. Only to buy Neos. And then I sold the Neos into Bitcoin, and now I have Bitcoins.
And so now you're sticking it. I'm with you now. Yeah.
And so now, I will buy Ethereum if it drops something ridiculous.
Right.
Hopefully I don't, but hopefully I stick with the Bitcoins and the Ethereum doesn't drop ridiculous. But I have both. In some sense, I'm happy if it goes up. I'm happy if it goes down. I also, like I said, I got these limit sells of Ethereum. I also have a limit sell of Ethereum to Bitcoin if it goes to 1.12.
Yeah.
Granted, it's unlikely, but for a day or a week, someone might put a 500 million market purchase, and it goes to 0.12 for 30 minutes, and I sell some, and then I buy back at 0.08 or whatever it may be.
Yeah.
So I just have these things laying out there. I don't have them at the ridiculous values that some people profit extremely from, but I have values that I make 50% profits if they trigger accidentally, which is the only real purpose of them.
Right, or just if the market dips, it might even be a legitimate like sell off into them. But you're basically saying, all right, at this price, it's a great value. At this price,
Yeah.
I'm not wanting to keep my position. I'm ready to take some other asset class or exchange it for it.
Yeah, and then in terms of like long-term worries in terms of crypto, so uh, if you're American or whatever, uh, you have expenses that you pay in U.S. dollar bills, and you perhaps have an income that comes in U.S. dollar bills. And if your income is greater than your expenses, then your crypto assets, your need to cash them out into US dollars, there's no pressure there. So if the values change up or down, try not to let that bother your psychology too much. But if your goal is to live off your crypto investments, like a lot of people want to do, that's very true.
It's the dream.
That's the dream. And if you have like 95% of your U.S. dollars, the value of your investments into cryptos, and essentially you're withdrawing crypto every week to pay your bills, then big market swings do affect your overall value of investments. But if you can get into a situation, which I would call ideal, where your U.S. dollar bill income is able to pay for your U.S. dollar bill expenses, and then your crypto income essentially can be used to buy more cryptos, or maybe to rebalance portfolio into cash out some cryptos into US dollars. But I kind of like the idea of hedging them against other cryptos. That's why I personally am good. I will hedge into Bitcoin probably next time, or hedge into Litecoin or Steemit or something.
Yeah.
You want to do something less risky, so maybe Dash, maybe whatever. But
the choices.
The choices. But you want to do something not associated when you're trying to do your hedge. So anyways, so that's the end of investment talk. That's all the major stuff that I can think about. But in terms of what's causing the values of cryptos in the market caps of cryptos, try not to think in terms of people are putting billions and trillions into these things. Try to think in terms of the velocity of the money coming in, and that will let you know, I think, intuitively a little bit more clearly whether or not something is approaching a peak potentially. Like Sean was saying, that if it lasts maybe 5 to 10 days at peak, then it might start to drop here shortly. It might be a good idea to cash out at those times.
And I think, you made an excellent point about the velocity, and considering that for sure when you're calculating market cap, because really, whatever the last trade was, that price, that's what's going to be a tremendous determining factor on the market cap. And you're not taking into account the volume.
The true value.
Right, because that's not the true volume. And we could give you a quick example market. Say we have ICOX, and ICOX is trading at $100 a share. Well, I buy 1 million shares of ICOX at $100 a share. That drives the price up to $200. Well, I still just have a bot up there selling 0.001 at $200, or even buying more at $200 a share. Yeah. That's going to artificially make my 100,000 shares that I bought down here at $100 double in value, because someone, which is really me and my bot, at 0.001 a share is paying this price up here.
Right.
And then if other investors say, you know what, there's people that are paying this price, and they don't look at the true volume, then that's kind of the run up we had in Ethereum, and it just stacks and stacks, and then they're like, you know what, I'm going to sell down here, and that kind of is how we've gotten back down.
Right. Exactly. And so so just keep that in mind, the velocity, and then in terms of big things coming up with Ethereum and Bitcoin, SegWit and the miner renegotiation for Ethereum both occur on August 1st. The idea is that Ethereum will go from 14.75 to roughly 4% is the hope. Maybe it goes down to 2%, maybe it's 6%. Whichever case, the lower the number that it pays out to the miners, so long as it's sustainable, is better for the investment holders. And then there's another idea I'll just throw out there temporarily, just so people know. There's an idea of doing masternoding with Ethereum. They refer to that as masternoding in Dash and a lot of the other coins. But you can also think of it as stake mining, and hash mining is a good way to think about it. In Bitcoin, 100% of the empty block space reward bonus, the potential for empty blocks, which for Ethereum and Bitcoin is both extremely low right now, But the potential for empty blocks, they pay 100% to the hash miners of Bitcoin and Ethereum both. But with Dash, they pay half of it to the stake miners, the ones who have major investments in the coin and mine the blocks. So I'm kind of hoping that Ethereum might go to a mixed mechanic like that on August 1st, and I think that would really help the price value, which essentially, like, you might say something like, if you have 100 Ethereum and mine Ethereum, if you have 100 Ethereum and mine Ethereum, then you get 50% of the potential reward, or double the reward if you happen to mine it, or it's just 50% delivered at random to all the people who mine and hold 100 Ethereum. Some people have speculated that should be 1,000 Ethereum or 10,000 Ethereum. But in either case, it's a good way to, it can help the foundation if you want to do it that way. Or it can just be a way to get to proof of stake mechanics, economics rather, proof of stake economics without worrying about the mechanics. The mechanics will come with validators and Casper in a year or so is the hope. But you can get to the economics of the matter now by doing either a master noding or some kind of stake mining technique, and it doesn't have to be 100% one way or the other. Dash does it 50-50 with a management fee. Ethereum can basically do the same thing without the management fee if they wanted to. So if Ethereum chooses to do that, it will create a greater stability in the price, is my speculation. If you look at Dash, it has shorter run-ups and shorter run-downs, because the amount of Dash coins, the volume of Dash coins is split amongst a wider user base, in my opinion, because you're required to buy exactly 1,000 Dash, or you're benefited significantly more if you have exactly 1,000 Dash. Right. Then with Ethereum, it doesn't matter if you have 5, 10, or 200 Ethereum. So you tend to have some people with 1 million and other people with just 10 or 20. Mm-hmm. In Dash, you have a lot of people with 1,000, and that's all they want. So that creates a little bit more stable market time to time. So I think Ethereum hopefully will do something similar to that come August 1st, something to look forward to. Yeah. So that's all I have. Midnight Discovery. Thanks for watching. Bye.
Come on by.
All right. Let's go do Pint Night.